Well, there was keen interest in what Fed Chair Jay Powell had to say at his speech in Jackson Hole earlier on Friday. There was a lot of interest in it, and it was actually really well received, partly because there were no big surprises. Now, the key takeaway from his speech was that it seems like the Federal Reserve is poised to start cutting rates. That was evidenced by the fact Jay Powell said in his speech that it's time for a policy adjustment, and that was enough to send U.S. markets rallying, because that is exactly what Wall Street was expecting, and that the rate cuts could come as soon as the FOMC's next meeting on September 17th and 18th. So good news there. This was further supported by the fact that Jay Powell also said that he feels confident that inflation is now moving closer towards that 2% target. That's notable because it's the first time he said he feels confident. In previous addresses and remarks, he said that he wants more evidence, looking for more confidence. Well, it seems like he's found it. And he also said that the Fed's dual mandate has specifically shifted away from just looking at inflation to focusing more pointedly on the labor market. He says that there has been substantial weakening in the labor market over the last 6 months in particular. He doesn't want to see any more weakening. He said the Fed wants to support the labor market. He noted that the unemployment rate currently stands at 4.3%, which he said is still relatively low. But he did note that there has been a 1% increase over the last 12 months. So he doesn't want to see that rate go any higher. Now, as far as the size of rate cuts and the pacing, he left that open-ended. He said that there is enough rope, the Federal Reserve has enough rope to adjust, whether it needs to make a smaller cut or it needs to make a bigger 0.5% cut initially. Will they have one rate cut, 2 or 3 this year? That is all open-ended, but because rates are quite high, between 5.25% and 5.5%, he said there is some room for adjustment there. And he said that the Fed will remain data dependent to figure out what exactly their next move will be as far as the size and the pacing of those cuts. There will be a lot of data that comes out before that next meeting in the middle of September. We'll get the jobs openings, the JOLTS report just after Labor Day. We'll get a fresh round of CPI and PPI inflation data as well. But most importantly, on September 6th, we'll get the August jobs report. The July jobs report was abysmal and helped spark that sell-off that we saw because unemployment ticked up higher to 4.3%, and just 114,000 jobs were added to the economy. Was that an anomaly? Will we see those job numbers revised lower as in previous months? That all remains to be seen. One thing that I want to point out is that Fed Chair Jay Powell also noted that the pandemic economy over the last few years is something that they have never seen before. It's unlike anything else, and they said there are a lot of lessons to be learned, and the Federal Reserve will be going back and looking over the last 5 years next year after the new year. Karina Mitchell, CGTN, New York.